How are you advising clients right now, especially given the fact that we are coming off of the Dow having its best day in 87 years, but historically we've seen these types of major moves on a single-day basis in the midst of recessions or bear markets?
Yeah, that's a great question. Good morning. So look, I think what you need to see is you need to see multiple good days of performance. We've had in the last couple of weeks, we've had days of very good bounces, but then there's been no follow through. So what we really wanted to see is a follow through day like today coming on the heels. That's a good sign. There's one thing that I would point out that is occurring, which is there is a leadership rotation occurring. Over the last 5 years, just buying low vol stocks has worked really well. Since early March, as the market has dropped, that hasn't outperformed. What is starting to outperform is actually more the cyclical stocks. That is a good sign of a bottom when you get a leadership rotation. But I really think you need to see a couple good days to think we put in a bottom here in the market on Monday.
It's an interesting point you make, especially given, I think, the fact that it probably feels counterintuitive to some investors to be focusing in on cyclicals right now, given everything we're seeing play out on a global basis where manufacturing is concerned, supply chains, et cetera. Alli, want to get your thoughts on this, how investors should be positioning themselves not only for the near term, but for the longer term right now, especially given the fact that we do have the S&P off about 30% from the highs. Is it too late to sell or to be building cash right now?
Not at all. Not at all. Look, we came from a rip-roaring economy, lowest unemployment we've ever seen, strong consumers, strong consumer balance sheets. We're going to get there again, whether it's a V-shape, a W-shape, a U-shape. When you are investing for long-term investors, that's not really the point, trading in and out. We are waiting for vol to come down. We have a VIX that the structure of vol has been coming down, which is something that we like to see. We just cannot sustain these levels, just like we cannot sustain the panic of going to the food store and hijacking toilet paper. But, we still have a realized over the last 10 days of north of 120. That's not an environment we want long-term trading in. We are still, when we get rallies, taking a little risk off the table for those clients who either need additional liquidity or would like to buy some time. We will redeploy that, and when we do, it will be largely into U.S. equities, whether we do that through the options market, ETFs, or active management, which I think is going to be a new trend you will see coming forward, the ability to produce alpha over a benchmark. That's what we're doing. But for now, I would say we have two pillars of the three-legged stool that feel great, Federal Reserve and hopefully fiscal. But we still have the dampening of that curve and what this virus actually looks like out there to deal with. And that's going to be very sensational for investors.
Andrew, you say this should be a two-quarter downturn based on where the market is now. But here's what I'm puzzling over. A lot of that seems to be based on the patterns that we see out of China and South Korea, which shut down their economies for a pretty extended period of time. It's not clear at this point that the U.S. is willing to do that based on what the president has said over the past couple of days. If the president does try to encourage various businesses to open back up within 3 weeks, say, how does that affect, in your estimation, the importance of flattening the curve, the economy, and therefore the market?
Yeah, well, that would, if in fact we could reopen the economy, then I think, as it pertains to the market, the low is in. I mean, I always remind people that the worst time to invest is when things are great and they go to less great, and the best time to invest is when things go from horrible to less horrible. If in fact the low of unemployment is in the next month, then that's a very good sign. I agree with you. It's a great point. China is a different situation, but look at Japan. The market peaked a couple weeks before we did. The market bottomed a couple days before, and the market's up 18%. If you look at the state of Washington, their numbers are not, they were the first in, their numbers are not growing quite as rapidly. So I think it's beyond just what's happening in China that leads me to believe Italy, the rate of acceleration is slowing down. So I think there is a chance that in the next month, the numbers will stop. The horrible numbers will be in the next month or so, and the market is a forward predictor, and it will start to look through that.